Welcome back, traders. This video is going to be about end of day trading, right? And reason for um, doing this video is because I think there's a lot more people out there that needs to know about the different type of trading that they can do, right? Because I'm sure there's a lot of people out there who's thinking, "Oh, I'm too busy. I don't have the time." All of these things, and they will say, well, I can't trade or make extra money on the side trading because of this. And end of day trading is perfectly designed for busy people. So end of day trading is basically um, what it sounds. End of the trading day. The end of the trading day is 10 p.m., right? UK time or your time, right? 10 p.m. Then it starts again. A new day starts again on at 10:01 p.m. Okay. Now, depending on the commodity that you're trading, it can start. It can the new day can start at 10:01 p.m. or the new day can start at 11 p.m. So, for example, I normally trade with gold and precious metals. Their day ends at 10 p.m. and open starts again at 11 p.m. Right? Cool. So, what is you have um, different type of trading. So I'm sure you've heard day trading. So that's when you trade during the day, you make your entries during the day, and you get out of your entries during the day, right? So you don't take trades overnight or go to the next day. Swing trading. So swing trading and end of day trading is similar, but the only difference is that you're trading at the end of each day on end of day trading. Whereas swing trading, you can make entries during the day, right? I mean, end of day trading, you can make entries during the day, but maybe you're unsure and you just want further confirmation. So you let the day, half of the day, a quarter of the day go to see how the candle is looking, and then you enter. But by design, um, end of day trading, you make your entries at the end of the day, right? Or at the start of the new day. So your analysis on the day on would be done on the daily time frame. Why? Because each candle is a day. So after each candle, you go on the computer at the end of every day to see how did that candle do today. Is it one of these little candles? Is it one of these big candles? Okay, this gives me a lot of hope that the market is looking to continue because it's this big candle here, right? Or there is a lot of momentum into the market because of this big candle. It gives you a bit more. It gives you so basically when I do the 4 hour time frame, I do my analysis every 4 hours, right? And I make my entry at the close of that 4 hour candle, right? So it's basically the same thing as the end of day. You're trading on the daily. Okay. Now you trade on the daily time frame. Your analysis is done on the daily, entries done on the daily, and you need to have correlation on the 4 hourly and the weekly. So for me, I normally trade on the 4 hour time frame. I make my entries on the 4 hour time frame, and I do my analysis on the 4 hour, the daily, and the hourly. Okay. Some people who trade on the daily time frame or end of day, they you go to the monthly. They use analysis on the monthly as well. Okay. So who is this for? This is for, like I said earlier, for busy people, people who are working full time jobs, intense jobs that keeps them busy all day, where they don't have any time to do analysis throughout the day. No time to sit in front of the computer, maybe a driver, maybe a nurse, a doctor, um, maybe just a busy entrepreneur. Um, I know busy entrepreneurs can do day trading as well, depending on how they set up their day, because entrepreneurs are in control of their days, right? So it's for these people. So after the end of the day, during the day where you're working hard, whatever, you come home at 5 o'clock or 6 o'clock, whenever you shower, eat, and then you rest, and then just before you go to bed, you do your analysis because it's at 10 p.m. That's when the next day starts or the close of the day's candle. So you do your analysis, right? Your analysis, once you get accustomed to it, once you get um, professional with it, your analysis should probably for each asset should take less than 3 minutes, right? You should be able to look at the charts and say, nope, not going to look at that one today. Excuse me, nope, not going to look at that one today. Oh, this is interesting. Let's look at that and dig a bit deeper. Okay. Um, so the benefits of end of day trading, and you can develop a skill called patience. The reason why I say a skill called patience is that because not a lot of people has it, right? Not a lot of people is willing to wait a whole day and have no trades. And at the end of the day, there is nothing. You don't make no money. Sometimes you're waiting months, weeks before you can make an entry, right? But when you do get that perfect trade, that A plus trade, the A plus setup, and you do make the entries, the rewards are higher on the higher time frame, right? And that's the only con as well is that you have to wait too, long. But if you look at it, there's both con. It's not really a negative. It's more positive than a negative because you're developing a skill that not a lot of people have, which is patience, right? In trading, there's a lot of people who would not wait for the full setup. They will, oh look, it's about to do this. Let me enter, and then it goes the opposite way. Oh, it's about to do this, but not actually waiting for the confirmation that it is going to do this, right? It is going to do this or that. So on a higher time frame, all of these levels that you see here are stronger. You know that these levels, once the market hits these levels, there is going to be a bounce, right? 9 times out of 10, there is going to be a bounce. Now, if you look at it, this here, now this is a range, but um, we had some sideways movement here at this level. It came back down and bounced, came down to this level here and bounced, came to this level, this level in here, nothing here, but this is more around the 50, this level. So you know that these level, the support and resistance levels are stronger. Where you would get your support and resistance levels would be on the weekly time frame, right? On a weekly time frame. So entries on the daily and support and resistance levels on the daily in addition to the weekly time frame. So the what I normally do is the higher time frame. So I trade on the 4 hour limit, my entries on the 4 hour. The daily is where I get my long term support and resistance. The 4 hourly is where I get my short term support and resistance. So if you're trading end of day and making entries on the daily, your the SNR on the daily would be the short term levels, and the SNR on the weekly would be the long term levels. So as you can see, the weekly doesn't have that many levels to look at, whereas on the daily you see a whole bunch. Okay. So the charts here are much easier to read. And when the candles move, it moves with intent. So you would have on the 5 hour time frame, the market is moving here, right? Then all of a sudden you see this, and then it comes back up, right? And then you see this, right? You don't really see that on the daily time frame. If you have a look here, you see the market has been bullish since for a very long time, right? And it's moving with intent, moving with intent. But this candle right here, you might see it on a lower time frame as um, right as this, right? And then that's a whole change in um, what do you call it, in direction, right? So this right here on the lower time frame is bearish. So on the lower time frame, the candle, the chart is bearish. This here the chart is bearish, but this here the chart is bullish. So you have more swings on the lower time frame. But on the higher time frame, like you see here, you don't have that many swings like that. And the charts are much easier to read on the higher time frame. Okay? You know that as soon as you come in, the moving averages are in order. On the 4 hourly, it's in order. On the daily. Now this is the 4 hourly, right? And then it's in order on the weekly, right? So as soon as you go in, you know what to look for. I'm looking for buys. That's what I need to know right now, right? So I'll give you an example on how long you might have to wait for a setup. Okay, so you have this first setup here. You have a setup here which is in December 31st, entry here, and you can take the market all the way up to February 21st until you have that pullback, which might stop out your stop loss, right? Then the next one is we're here, uh, February 24th, and next entry is March 12th, okay, which is not bad. That's less than a month. Then you take the market up, you have that pullback, which will probably stop you out. And then from here, so from March 12th to April 2nd, so that's a whole month and a half, month and some change and some days, month and a week, right? 2 weeks actually. Yeah, month and a half. Yeah, month and a half. Um, you're in this trade, right? So, and then you have this pullback. So from 2nd of April, we don't really see anything. This right here is, you could say something. That's why I have the arrow here. And then the breakout would be here. Um, and let's say you got stopped out at this level. From April 21st, so from April 16th to April 21st, so only 5 days of trading there. And then all of this here, nothing. All of this is nothing. It's just moving sideways. This is 4 months, 4 months of just nothing sitting on your hands. Okay? This is the patience that you need as a trader. Absolute patience, understanding and not trying to rush the market, not trying to rush a trade. In fact, the strategy doesn't even show itself on this move until you got here, right? So the market just basically shut up, right? You might have had some sideways movement here. Eh, maybe. Nah, 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 nah. I wouldn't take that trade. So you have um, sideways movement here, Hmm. No, I think I would have preferred to see a pullback first. I prefer to see a pull. This is too long. For me, this is too long of a one-way direction and no pullback at all. So here's the pullback here. Yeah, V-shaped sideways movement and then entry here. So what is this? September. So from April to September, that's what, 5 months? April, May, June, July, August, yeah, 5 months, September. All right. So you make the entry here, but all that um, months that you probably didn't make any money, you can make it right here on this move up here, right? So here, how many pips is this? So this is 489 pips. 489 pips. You could definitely do something with that. Yeah. Um, let's keep going. Okay, so there is some possibilities here where I would be a bit more cautious. So from your exit here, you pull back, you have the V shape, but there's no, nah, no. Nope, nothing there. Nothing there. V shape, sideways movement. Yeah, I think we have something here. So now where are we? We're at 16th of October to January 6th, the 9th of January 2026. So October, November, December. So 3 months of waiting. All right. But then look at this. You enter here, and that 3 months that you think you've lost, take it from here all the way up to here, which is January 28th. Within January 9th to January 28th, so 19 days, you probably would have made a few, you know, five-figure trades, 20,000, 25, 30, maybe even 50,000 on this trade here, right? Um, and let's test out so from time you enter here, you take the market up, okay, then you see this, you bring your stop loss here, right? That's to break even. And this candle closes. Now you're watching this candle, waiting for this to close. You see that it's red. You don't move this. You see that's green, but it didn't close above this previous candle. So let's leave that alone. No, and definitely no. Don't move your stop loss yet. And then boom, you have this one. Boom, stop loss. Pick up your stop loss. This one closed, pick up your stop loss. That's closed. Bring up your stop loss. Bring up that stop loss. Right, and you trail it just like this. This is perfect. This is angelic, right? And you can see that on a good trade, it doesn't go below the previous one, right? That one. And I'm saying, let's pull that back. I'm saying this one because now I can see it. But if I cannot see this, if I couldn't see this, I would probably keep my stop loss here, right, at the close of this candle, and then um, just wait for the close of this candle, and then bring this up. Wait for the close of this candle, bring that up. So now you can see that we're heavily oversold, right? And what I would do as this candle is going, I would bring it up, bring it up, bring it up, bring it up. But we're doing end of day, so you probably wouldn't have time to do that. But at the end of each day, you move up your stop loss. At the end of the day, move your stop loss. Same thing. End of the day, move your stop loss. End of the day, move your stop loss. Move your stop loss. Move your stop loss. Okay. Now, at the end of this day here, you probably reach this level. Let's see where we are. That's where we are here. Yeah. And let's see where we are. This one. Okay, cool. So my level from here, if I made an entry here, the level that I'm looking for to actually get out of the trade would be this one because it's on the higher time frame. It's on the weekly. So it will be this one here. So if I want to put my target would be here. And it worked out just fine. Exactly where my target is, exactly where now you have some ranging going on, and exactly where the market closed. It did go up further. Now you would have probably made a lot of money at this point up here, and I would hope that you would have gotten out of the trade because of that. Yeah, cool. So the strategy that you have, it doesn't change because you're on different time frame or you're not trading during the day. You're only trading at the end of the day. It doesn't change. My strategy still remain the same, right? So as you can see here, now we're getting some movements here. So you have the V shape. Now we're getting some sideways movement. This is the currently right now, right? The candle, the RSI is down. You haven't get any breakout yet, but right, I would be marking this here, the sideways movement, and waiting for the breakout. That's what I would be doing. Waiting for that breakout, and then upon that breakout, entry here. I will still look and be cautious at this level here because this is where the pivot line is, right? So this is where pivot line is on the weekly and the daily. So we have to be a bit more cautious there. But again, trail your stop loss. Make sure you're not losing money. If the market does reverse back on you, then you're protected. Okay? So the strategy can be done. No matter what strategy you have, you can do it at the end of day, during the day, or swing trading. Okay? So I hope that's been helpful for you. I hope that's been educational for you. Please comment, like, subscribe if you want more content like this. All right? Peace.